Weekly FX Playbook. October 13th to 17th, 2025, gold, oil, and the USD story. All right, traders, big week ahead. No, not big like hype, big like opportunity. Gold's running hot, oil's wobbling, and the USD is stuck in limbo. If you trade FX, you have to know what's happening this week. Let's go. In the week October 13th to 17th, three things matter: data flow and Fed tone, commodity movers, oil and gold, and regional headlines that move the euro and other majors. There's lower liquidity in places, Asia holidays, and the IMF and fiscal reports are adding extra background noise. This means that expect punchy, theme-driven moves, not slow grind. 1. USD data light Fed focus. First, the USD. The big picture is that markets still price Fed cuts later this month. But every Fed speaker or minutes release now gets amplified because official US data has been thin. When data is thin, narrative rules. That makes USD pairs volatile and whipsaw prone. So your job this week: trade reaction, not prediction. Wait for real price confirmation before adding size. If Fed commentary leans dovish, the USD will fall. Hawkish lean, and the USD spikes. Keep positions small until you see conviction. 2. Gold, momentum, but watch yields. Gold is still the single most watched safety asset right now. Crowd is piling in, and momentum is strong. But here's the nuance. Gold's move is being driven by dovish rate expectations and geopolitical jitters, not fundamentals like jewelry demand. That means if yields snap higher or USD rallies, gold can correct fast. 3. Oil, supply talk versus demand reality. OPEC has announced a modest supply adjustment. The market reaction? A small pop in prices, but don't read too much into it. Demand concerns and seasonal refinery cycles still cap the upside. For FX traders, the takeaway is clear: oil-linked currencies, CAD and OK, are vulnerable unless oil finds fresh demand-led buyers. 4. Eurozone and regionals, sentiment versus politics. Europe's story is mixed. Sentiment indicators have improved slightly, but political flashpoints, France local reports, can create sharp moves. That means euro trades are a play on relative weakness/strength. If USD weakens, euro may rally even without stellar euro fundamentals. If eurozone headlines sour, euro drops fast. Trade euro pairs cautiously. Favor trades that follow clear USD weakness, not standalone euro optimism. Risk on equals opportunistic. Risk off equals protect. Don't add unhedged carry exposure after sudden risk downdrafts. Risk rules: small size, hard stops, keep one pivot per theme. If the Fed narrative or a commodity break occurs, pivot fast. Markets this week will try to trick you. False breakouts, headline whipsaws, and crowded trades. Use smaller position sizes, wider context level stops, not random tight stops. And always ask, what will change my view? That's your exit/rehit rule. If you trade Forex, gold, or oil this week, be prepared but not paranoid. Watch USD narrative, gold support, and oil demand signals. Act on confirmation, not on fear. If this gave you clarity, smash the like button, subscribe, and drop your pair in the comments. I'll pick a few and give trade levels in the pinned comment. Trade safe, trade smart.